Mohamed El-Erian is standing by patiently. He is the CEO of the world's largest bond fund, just came back from Europe. Mohamed, great to have you with us. We wish in a way it was under better circumstances with a jobs report like this that is pretty grim here. No hiring going on. What do you make of it?
It's grim and scary, Betty. If you look at the 3-month average, we're now down to 35,000. That is too low. It is too low for job creation. It's too low for regaining confidence. And it's not just the levels that worry us here at Pimco. It is the composition of the unemployment, and it is the duration of unemployment. So whichever way you look at it, level, composition, or duration, this is a worrisome report, and hopefully it will ring alarm bells in Washington.
Dr. Erlichman, it's Dominic here. One of the things that you spoke to, one of the past few times you've been on, is this idea that government intervention has become tactical in nature. How much more do governments around the world have to actively manage the markets in order for this whole thing to work itself out?
It's not just manage the market. I mean, if you step back, let's look at the U.S. You have an unemployment crisis, not a problem, a crisis. That means that we need crisis management. Crisis management has to be holistic in nature. We have to lift the structural impediments facing the unemployed. We can't just rely on the Fed, because the Fed may be able and willing to do something, but its policies are less and less effective. You go to Europe, they have a crisis there too. So what we need are holistic approaches rather than these ad hoc tactical ones.
And holistic meaning help from the Fed here, help from Washington, right? And basically help from the markets in many ways, some stability.
Correct. You need three things. First, you need a coordinated approach across agencies. So not just the Fed, but other Washington, D.C. agencies. Secondly, you need coordination around the world, because if we don't get China, Europe, and the U.S. all playing out of the same music sheet, we're not going to get things better. And thirdly, importantly, you need cooperation of the politicians, right? So it's one thing for President Obama to propose, but the politicians also have to get on board.
Mohamed, I know you said you wanted to hear more details coming out from the White House and from Gene Sperling on what they're going to do about jobs. But overall, Mohamed, what does Washington need to do to help American business?
Washington needs to understand, and understand urgently, that if it doesn't move decisively in a comprehensive manner, things will get much worse. Why? Because the dynamics of the economy and the dynamics of markets push towards further weakening. And also Europe is very far away from solving its issues. So we need a comprehensive approach. You've heard me say this again. We need something on housing, on labor markets, on credit, on infrastructure, and on public finances. Unless we see a comprehensive approach, it will be, again, too little, too late.
Just to bring you the perspective from the trading floor, I've been calling around this morning, Betty. Mohamed used the word scary earlier. When I asked traders what's the mood like this morning, they did say that money managers who are calling and selling or whatever are scared. And it's not because of the headline today, because everybody expected that you would have a number that's not all that encouraging, but it is because of the lack of action, or at least the perception of a lack of action.
Well, Mohamed, I've got a question for you. It's Mike. A lot of people talking this morning about the Fed stepping in on September 21st. I have a very hard time figuring out what lowering interest rates by itself is going to do. Is there some way the Fed could act to remove some of the blockages in the transmission mechanism to get money out into the economy? Basically, is it time to rev up Milton Friedman's helicopter somehow?
So, Mike, you're absolutely right. People tend to focus just on, is the Fed willing to do something, and is the Fed able to do something? The third element that is absolutely critical is, if the Fed is willing and able, which it is the Fed effective? Does it have the right policy instruments? And judged on that parameter, the Fed does not have the right policy instruments. So the only thing the Fed can do is provide another bridge for the other agencies. How can it do that? It can try to extend the maturity of its balance sheet, it can try to expand the size of its balance sheet, and it can expand the instruments it buys. But at the end of the day, the Fed is a bridge, and if the other agencies don't react, it's a bridge to nowhere.
So then, Mohamed, if the Fed were to launch, some outright asset purchases and really go straight into QE through, you think it would actually do more damage than good?
Yeah, I think even Bernanke has said there are benefits, costs, and risks, and the balance between the benefits and the costs and risk has changed in an adverse manner. So there is a risk that if the Fed just goes alone, we see commodity prices going up again. That weakens the economy. We see the Fed coming under more attack from the political wing. That will weaken the credibility of the Fed. And at the end of the day, we will not be solving anything. We'll just be undermining the economy and a critical institution for the well-being of America.
You mentioned a long list of things that Washington should do. What would be the most important single thing they could do? Would be to find some way to attack housing?
Yeah, housing is critical. I wouldn't put it as single. So I would encourage encourage Washington to be comprehensive and not to try to focus on just one issue. That's the trouble. So far, we've gone in an ad hoc fashion. It's the same thing in Europe as well. I mean, another thing that's scary this morning is what has happened in Europe overnight.
Yeah.
You have news out of Greece. You have the ECB unable to control the Italian yield. All that is adding to the concerns out there.
But at the same time, Mohamed, when we talk about risks, what is the risk to an investor who hasn't owned bonds and sees today that people are buying bonds again, and because of all the headlines decides to buy bonds, a year out? Can you expect that you're going to, aside from holding on to your capital, at this point is the possibility that putting your money into the bond market will result in a negative return?
So you said critically, apart from holding on to your capital, we always say there's a time when you worry about the return on your capital, and there's a time when you worry about the return of your capital. So it depends where your money is. If your money is in cash, stay there. If you are overexposed to the equity markets, or if you're overexposed to other risk assets, be careful. Take down that exposure a little bit. You will have better opportunities to increase that exposure down the road. So a lot depends on your starting position.
Mohamed, are we on the precipice even more after this labor report of a recession?
Yeah, I had a probability between 1/3 and a half and a probability of a half for Europe. I think that this number and the compositional elements will tend to increase those numbers. So yes, the downside risk is increasing, and now there's going to be even more attention on what President Obama says on Thursday. It's a critical speech, Betty.
Do we have, Mohamed, a new normal here? Is your 2% number now for potential U.S. growth too high?
A week ago, Bill called it a new normal minus, and the minus speaks to we're looking at significant downside risk. And part of that has been that we have delayed so much the policy response out of Washington that even the new normal now, believe it or not, looks a little bit optimistic.
Mohamed, I'm just curious from your point of view. I mean, you were just on with Gene Sperling. Did you have any more confidence that the White House has any control of what they're going to do about the jobs market from hearing Gene?
So it's hard to say because I didn't hear what he has to say, but we also have to realize that whatever they come up with, and hopefully they'll finally come up with something good, but whatever they come up with has to pass Congress. And that is, you need 2 more segments on this just to discuss what the dynamics on Congress are like.
Right, and we only have 1 more segment in this show, so Mohamed, we're going to have to let you go on this. But thank you very much. Always appreciate you joining us. Mohamed El-Erian, the Pimco CEO, the world's largest bond fund. Great to have you on, and I want to have you back on soon again.